Price Action Analysis November 18 to 19, 2025. Initial decline. The chart opens with Bitcoin near the $93,500 level. Shortly after 4:30 p.m. on November 18, the price started a steep decline, which accelerated and pushed the price below $90,000 early on November 19. Market lows. On November 18, Bitcoin prices slid below the $90,000 mark for the first time since April 2025. The market hit lows near $89,391, $90,038 during the daily trading period that included this time frame. Partial recovery. Around 7:30 a.m. on November 19, the price began to recover, climbing back up towards the $91,500 level by 12:30 p.m., as seen in the green candlesticks. Volume. High volume bars, both red and green, are prominent during the periods of sharp price movement, indicating strong trading activity during the declines and subsequent rise. This price action reflects the broader market sentiment at the time, as news reports indicated declining investor confidence and a significant market sell-off across various cryptocurrencies. During the period captured in the chart November 18 to 19, 2025, news sentiment was overwhelmingly negative and characterized by extreme fear as Bitcoin's price plummeted below key support levels. Key news and sentiment drivers. Broad market sell-off. The crypto downturn was part of a broader, risk-off move across global financial markets, including a rout in US and Asian tech stocks due to concerns over a potential bubble and general economic uncertainty. Federal Reserve uncertainty. A primary driver of the negative sentiment was uncertainty around potential US interest rate cuts. Sticky inflation raised questions about whether the Federal Reserve would ease its monetary policy, which typically benefits risk assets like cryptocurrencies. Price drop and market lows. Bitcoin's price dropped below $90,000 for the first time since April 2025, wiping out all of its 2025 gains and triggering a massive wave of liquidations for leveraged positions. Investor behavior. Market sentiment indicators, such as the Crypto Fear and Greed Index, plunged to extreme fear levels not seen since major crash events like the Luna collapse. The rapid, cascading sell-off was fueled by profit booking from long-term holders and panic selling from short-term retail investors. Despite the prevailing fear, some analysts and institutional players viewed the sharp decline as a bull market correction, or a clearance sale, suggesting it was a temporary reset within a larger ongoing uptrend. This contrarian, buy the dip, mentality was noted among some Indian investors and high-net-worth individuals. Chart analysis. Price top panel. The Bitcoin price began near $91,000 on November 18 and experienced a sharp rise to nearly $93,500 by late evening, followed by a steady decline that bottomed near $90,500 the next morning. It subsequently rebounded to around $91,500 by midday on November 19. Volume. Middle panel. Trading volume was notably high during the initial price surge and subsequent drop on November 18, decreasing as the price consolidated overnight and into the next day. Accumulation. Distribution. Bottom panel. The 8D line generally mirrored the price action, rising with the initial price increase and falling as the price dropped, which typically confirms the strength of the prevailing trend. The line briefly showed a positive divergence, rising while price made new lows around 7:30 on November 19, signaling potential underlying buying pressure before the price eventually moved upward. The accumulation distribution indicator. The AD indicator is a volume-based tool used in technical analysis to assess underlying supply and demand. Function. It helps determine whether an asset is being accumulated, bought, or distributed, sold, by calculating money flow volume based on where the closing price falls within each period's high-low range. Trend confirmation. When both price and the 8D line move in the same direction, it confirms the strength and sustainability of the current trend. Divergence. Divergences can signal potential trend reversals. A bullish divergence occurs when the price makes lower lows but the 8D line makes higher lows, indicating accumulation, suggesting an upward reversal is possible. A bearish divergence is the opposite. Based on the chart showing price action for November 18 to 19, 2019, the market sentiment was initially volatile with bullish momentum that faded into a bearish correction, driven primarily by technical factors rather than specific news events during that short 15-minute chart period. Price action summary. Bullish surge. November 18, evening, the price experienced a sharp rally from around $91,000 to nearly $93,500 on high volume, indicating strong buying interest at that time. Bearish correction. November 19, overnight morning, this was followed by a sustained correction, with the price dropping significantly to a low of approximately $90,500. Consolidation. Rebound. November 19, midday, the price then rebounded slightly and consolidated around the $91,500 level. Broader market context in November 2019. The daily price data for November 2019 shows that Bitcoin was generally in a downtrend throughout the month. The average closing price for the month was around $8,373.57, and the price was down nearly 18% for November. The price movement seen in your 15-minute chart represents a short-term volatile fluctuation within this larger monthly downtrend. News sentiment link. Sentiment analysis generally suggests that positive news leads to higher prices, while negative news leads to lower prices. The brief bullish spike on November 18 was likely driven by short-term market dynamics or minor positive news events, but the overall sentiment of the period was generally more cautious or negative, as evidenced by the prevailing monthly downtrend. No single high-impact news event was identified as the direct cause for this specific 15-minute fluctuation, which is common in a market largely driven by investor sentiment and technical trading. Bitcoin BTC USD is currently priced around $91,338, continuing a general downward trend seen in the last 24 hours. The provided chart from November 18 to 19, 2025, uses Bollinger Bands BBA/NDS to illustrate price volatility and potential overbought/oversold conditions on a 15-minute timeframe. Current market overview. Current price: approximately $91,338 as of November 19, 2025. Daily range: the price has fluctuated between roughly $89,970 and $93,745 over the last 24 hours. Recent trend: Bitcoin is in a short-term bearish trend, down about 1.75% today, and has fallen significantly over 12% in the last week. Bollinger Bands BBA/NDS interpretation. Bollinger Bands are a technical analysis tool that helps traders assess market volatility and identify if an asset is relatively overbought or oversold. BB upper, lower. These bands act as dynamic resistance and support levels. Prices near the upper band are often considered overbought, while prices near the lower band are potentially oversold. BB middle. This is typically a 20-period simple moving average (SMA). The price moving above or below this line can indicate the short-term trend direction. Volatility. The narrowing of the bands A, squeeze, suggests low volatility, often preceding a significant price move in either direction. The widening of bands indicates high volatility. Observations from the chart. Trend. The price on the chart, which spans November 18 to November 19, 2025, shows a notable drop where the price moves from the upper band down towards and then below the middle and lower bands. Volatility. The bands widen during the sharp price drop around 21:45 on November 18, indicating high volatility, and narrow slightly as the price consolidates near the lower end of the range on November 19. Current position on chart: the price is currently near the lower Bollinger Band, suggesting a potentially oversold condition within the context of that specific 15-minute timeframe, which might precede a bounce back toward the middle band. During the Bitcoin price action period shown in the chart November 18 to 19, 2025, market sentiment was overwhelmingly negative, characterized by extreme fear and a broad risk-off environment. Key drivers of the negative sentiment. Macroeconomic uncertainty. The primary driver was a sudden repricing of expectations regarding U.S. interest rate cuts. The probability of a December rate cut fell sharply, triggering a swift sell-off in risk-sensitive assets, including cryptocurrencies and technology stocks. Broad market sell-off. Bitcoin's decline was part of a wider market downturn that saw equity markets S&P 500, DAX also fall. This indicated a general loss of investor appetite for riskier assets. Whale activity and liquidations. Large investors, whales, were observed reducing their positions, contributing to the selling pressure. A massive wave of leveraged positions across the crypto market exacerbated the price drop. Retail investor panic. As the price tumbled below key psychological support levels like $100,000 and $90,000, retail investors panicked and greed index to a low of 16, extreme fear. Contrasting views. Despite the prevailing fear, some institutional players and long-term holders viewed the correction as a healthy, cyclical, buy-the-dip opportunity. On-chain data showed that whales began accumulating BTC at the lower price levels, suggesting confidence in a potential rebound later in the year. This image displays a 15-minute candlestick chart for the BTC-USD pair, utilizing an exponential moving average EMA. The chart covers a period from November 18 to November 19, 2025, and includes price and volume data. Chart components and analysis. Candlestick chart. Each candlestick represents the open, high, low, and closing price of Bitcoin against the US dollar BTC-USD over a 15-minute interval. Exponential moving average EMA. The light blue line is an EMA 14-period EMA. This indicator places greater weight on recent price data, reacting more quickly to market changes than a simple moving average SMA. Hollow bullet. The price traded both above and below the EMA 14 line during this period, which can be interpreted as potential short-term shifts in momentum. Volume. The bars at the bottom indicate trading volume. Taller bars show higher trading activity for that period. Price movement. The price initially rose on November 18, peaking around the $93,500 United States dollars level before experiencing a significant drop that pushed it below $90,500 United States dollars on November 19. This rapid drop below a key support level of $93,000 reactivated selling pressure, reinforcing a negative outlook in the short term. During the period of the chart November 18 to 19, 2025, news sentiment for Bitcoin was overwhelmingly negative and dominated by extreme fear. The price action in your chart, which shows a significant drop from over $93,000 to below $90,000, aligns perfectly with major news headlines from that time. Key news sentiments and drivers. The prevailing sentiment was bearish, driven by a risk-off mood in global markets. Major price drop. News outlets widely reported that Bitcoin had crashed below the critical $90,000 support level for the first time since April 2025, wiping out all of its gains for the year. Macroeconomic uncertainty. A primary driver was uncertainty regarding the U.S. Federal Reserve's future monetary policy. Doubts about potential interest rate cuts pushed investors away from risky assets like cryptocurrencies and towards safer investments. Extreme Fear Index. The Crypto Fear and Greed Index dropped to a reading of 16 out of 100, signaling extreme fear among market participants. Technical breakdown. The price action saw several key support levels fail to hold, including the $93,000-$95,000 zone. Technical analysts noted a death cross pattern on some short-term charts, further fueling bearish sentiment and selling pressure. ETF outflows. Reports indicated continued outflows from spot Bitcoin exchange-traded funds ETFs, with over $1.2 billion shed the prior week, which added to the selling pressure. In summary, the market was in a state of flux, characterized by high volatility and strong selling pressure as investor confidence waned amidst macroeconomic and technical concerns. Market Overview November 18 to 19, 2025. The period depicted captures a notable market downturn where Bitcoin (BTC) prices fell to their lowest point in several months, even wiping out its gains for the year 2020. Price action. The price chart shows a downward trend, dropping from levels around $93,000 to below $90,000 on November 18. The price fluctuated in a daily range of approximately $89,600 to $93,900. Key drivers. The decline was attributed to several factors including general macroeconomic uncertainty, profit-taking by long-term holders, large institutional outflows, and negative sentiment in the broader equity market. Investor behavior. Despite the price drop often seen as a crash correction, some investors viewed it as a buying opportunity, with Indian exchanges, for example, reporting a surge in buying activity as the price fell below $90,000. Technical indicators analysis from the image. MACD Moving Average Convergence Divergence. The MACD line purple crossed below the signal line yellow in a bearish crossover early on November 18, which is a potential sell signal for traders. The histogram green-red bars moved into negative territory, indicating increasing downward momentum. Volume. There was high selling volume, large red bars in the volume section, around the time the price dropped significantly on November 18, confirming strong selling pressure during the decline. During the price action period shown in the chart November 18 to 19, 2025, news sentiment for Bitcoin and the broader crypto market was overwhelmingly negative, characterized by extreme fear and a risk-off environment in global markets. Dominant negative sentiment. Extreme fear. The market's fear and greed index plunged to as low as 11 on a scale of 100, a level described as extreme fear, not seen since major crash events like the Luna collapse or the market lows of April 2025. Widespread sell-off. News headlines highlighted that over $1 trillion had been wiped off the total cryptocurrency market value in the preceding 6 weeks, with Bitcoin's drop below $90,000 erasing all its 20s. Bearish technicals. News articles frequently cited bearish technical signals, such as the price breaking below key support levels $95,000 and $93,200, and the 50-week moving average, which analysts interpreted as confirming a breakdown of the prior bullish trend. Key drivers of negative sentiment. Macroeconomic uncertainty. The primary driver was uncertainty around the U.S. Federal Reserve's future interest rate decisions and broader negative sentiment in the equity markets, including fears of an artificial intelligence (AI) stock bubble. Higher interest rates make speculative and less attractive. Flows and liquidations. Large institutional investors reduced their positions, and significant outflows from Bitcoin exchange-traded funds (ETFs) were noted. This triggered a massive wave of liquidations for leveraged, long positions bets that the price would rise, with over $1 billion liquidated in a single day. Profit-taking. Long-term holders who had accumulated Bitcoin between 2020 and 2022 began taking profits, adding to the selling pressure. Contrarian positive sentiment. Despite the prevailing fear, a notable contrarian narrative emerged. Buy the dip. Many retail investors, particularly in regions like India, and some large entities like the country of El Salvador and institutional firm Strategy Inc., viewed the crash as a temporary correction and a clearance sale, or buying opportunity. Long-term conviction. Industry experts and long-term believers maintained that the decline was macroeconomic noise and not a structural market collapse, suggesting the underlying long-term bullish cycle remained intact. Market analysis. Trend. Bitcoin was in a short-term downtrend during the period shown, having moved below key levels of support. Massachusetts 14, the moving average line represents the average price over the last 14 periods, 15-minute intervals. The price staying consistently below the downward sloping MA14 confirms the short-term bearish momentum. Key levels. The price found some support near the $92,000 level, which has been an area of interest for traders. Volume. The trading volume bars at the bottom show some periods of higher volume, particularly during the initial price drop on November 18 around 2200, indicating selling pressure. Current outlook. As of November 19, 2025, Bitcoin has been trading near the $91,000–$92,000 range. Market analysts are watching to see if the price holds at this support level or if a decisive break lower will occur. External market factors, such as the upcoming Nvidia earnings report, are expected to influence price movement due to high market correlation. Surrounding Bitcoin during the period shown in the chart November 18 to 19, 2025 was overwhelmingly negative, characterized by decline. Key drivers of negative sentiment. Several macroeconomic and market-specific factors contributed to the prevailing fear and selling pressure. Federal Reserve uncertainty. Traders were reassessing the likelihood of an interest rate cut by the U.S. Federal Reserve in December. The possibility of fewer rate cuts reduced investor appetite for riskier assets like cryptocurrency, contributing to a broader market decline. Forced selling and liquidations. As prices fell below key technical support levels, it triggered widespread margin calls and the forced liquidation of highly leveraged trading positions across various exchanges. This intensified the sell-off and accelerated the price drop. Broad market risk aversion. Negative sentiment around the general equity market and global economic uncertainty pushed investors away from volatile assets. Technical weakness. The price action signaled deep technical weakness, including a death cross technical signal and a failure to hold the psychologically significant $100,000 level. Whale activity. Reports indicated that large holders, whales, were reducing their positions, adding to the selling pressure. Market reaction. The visible price drop in the chart reflects this sentiment perfectly. Bitcoin fell below $90,000 for the first time in 7 months. The overall market fear and greed index for the crypto market bottomed out at 15 out of 100, indicating a state of extreme fear. Options traders heavily sought. Downside protection, with increased demand for contracts betting on further drops to the $85,000 and $80,000 levels.
Profitable for one more learning video tutorial, and today we are going to explore, or we can say that we are going to interpret or identify transaction made on a chart. So I have been created a project in GitHub which you can check it out. So if you just click on this one, the things are available. So if you just you can download the stuff, or you can get clone this stuff. Okay, so from that you can utilize this chatbot. Okay, I've already done how you can run utilizing the web-based code editor as code space. So all you have to do is click on the code spaces